Welcome back to AlgoBot, the channel where we break down automated trading strategies for MetaTrader 5, one expert advisor at a time. I'm your host, and today we're exploring a strategy called the Accumulative Swing Index Breakout. This expert advisor is built on a classic indicator designed by J. Wells Wilder, the Swing Index, and its running total, the Accumulative Swing Index. Over the next few minutes, you'll learn how this approach measures the genuine strength behind each price move, how it defines a breakout, and how it manages risk with volatility-based stops. Let's get started, and remember, this video is for educational purposes only. So what exactly does this expert advisor do? At its heart, the Accumulative Swing Index Breakout is a trend-following, breakout-style strategy. Instead of reacting to raw price alone, it studies a specialized indicator. Raw price breakouts can be noisy because a single bar can poke above a level on a thin, gappy, or small-bodied move that doesn't reflect real commitment from buyers or sellers. Wilder's Swing Index was designed to address exactly that problem. It scores each bar's true directional commitment using the geometry of the open, the close, the previous close, and the true range. In plain terms, it asks how much of a move was genuine displacement and how much was just a wick or noise. When you add these swing index readings together bar after bar, you get the Accumulative Swing Index, a smooth line that many traders treat as a truer picture of the market. This expert advisor watches that Accumulative Swing Index line and looks for it to break out of its own recent range. It's typically applied to the foreign exchange market on a single primary time frame, though the concept is general. The strategy also layers in an exponential moving average of the Accumulative Swing Index as a regime filter, so it only participates when the broader direction agrees. Risk is handled with the average true range, a common volatility measure, which sets both the protective stop and the profit target. This type of approach may appeal to traders who are curious about indicator-based, rules-driven systems, and who prefer a structured, mechanical framework over discretionary decisions. As always, this is educational information, not a recommendation, and trading involves a real risk of loss. Let's walk through the mechanics step by step. The expert advisor works on closed bars only. Every time a new bar opens, it means the previous bar has just finished, and that completed bar is the one the strategy evaluates. This avoids reacting to a candle that is still forming and changing. First, the strategy calculates Wilder's Swing Index for the just closed bar, using that bar together with the one before it. That single value is added to a running total, and this cumulative sum is the Accumulative Swing Index. The expert advisor keeps a rolling history of these values so it can measure the line against its own past. Now for the entries. The core idea is a Donchian-style breakout, but applied to the indicator rather than to price. The strategy looks back over a defined number of bars, 20 by default, controlled by the BreakoutLookback parameter, and finds the highest and lowest Accumulative Swing Index values in that window. A long setup is recognized when the current Accumulative Swing Index climbs above that prior high, meaning it has printed a fresh high of its recent range. But there's a second condition. The Accumulative Swing Index must also sit above its own exponential moving average, whose length is set by the AsiTrendPeriod parameter, 10 by default. That moving average acts as a regime filter, confirming an established upward environment. A short setup is the mirror image. The Accumulative Swing Index falls to a fresh low of its recent range and also sits below its exponential moving average. Once a valid signal appears, risk is defined using the average true range, calculated over the ATR period. The stop-loss distance is the average true range multiplied by the ATR-stop-multiple parameter, 2 by default. The take-profit distance is that stop distance multiplied by the reward-risk parameter, 1.8 by default, giving a target that is larger than the risk. For a long, the stop sits below the entry and the target above it. For a short, the stop sits above the entry and the target below it. Position size is fixed by the lots parameter. Finally, the strategy manages open trades. It never stacks positions. If an opposite Accumulative Swing Index breakout appears while a trade is open, the expert advisor treats that as a structural sign that the move has turned, and it closes the position early. Otherwise, the stop-loss and take-profit handle the exit on their own. Let's look at the actual MetaQuotes language code that runs inside MetaTrader 5. At the top are the input parameters, and these mirror the settings we've discussed. Breakout lookback is the number of bars used for the accumulative swing index range, defaulting to 20. ACI trend period sets the length of the moving average regime filter, defaulting to 10. ATR period, ATR stop multiple, and reward risk together define the volatility-based stop and the profit target, while lots fixes the position size. Below the inputs are the two conditions that define a signal. The variable breakout up is true when the current accumulative swing index, called ACI now, is greater than the prior high of its range and also greater than its own moving average, ACI EMA. The variable breakout down is the opposite. ACI now is below the prior low and below the moving average. Now look at the long block. When breakout up is true, the expert advisor reads the current ask price as the entry, places the stop loss below it at the entry minus the stop distance, sets the take profit above it at the entry plus the target distance, and then calls trade.buy to open the position. The short block mirrors this exactly. In the else branch, when breakout down is true, the expert advisor reads the bid price, places the stop loss above the entry, sets the take profit below it, and calls trade.sell. Notice both sides use the same average true range stop and the same reward to risk target, just flipped in direction. That symmetry keeps the logic clean and easy to follow. Let's bring this to life on a chart. Across the top you can see the price candles, and in the panel below is the accumulative swing index, shown in gold, together with its exponential moving average in blue. Remember, the strategy doesn't watch price breakouts directly. It watches this indicator break out of its own recent range, with the moving average confirming the direction. Watch how the two work together. On the far left, the market is quiet. Price drifts sideways in a narrow consolidation, and in the panel below, the gold accumulative swing index line is hovering in a small, flat range near its moving average. There's no clear commitment in either direction, so the strategy simply waits. This patience is a defining feature of a breakout approach. It does nothing until the indicator proves that a real move is underway. Then, on the fourth candle, we see a strong bullish bar as price pushes up out of the consolidation. Look at the gold line in the panel. The accumulative swing index jumps to a fresh high of its recent range, climbing decisively above the blue moving average. Both conditions are now satisfied, a fresh high of the range, and the indicator sitting above its own moving average, confirming an established upward regime. This is where the buy entry marker appears. The expert advisor opens a long position at the ask price. At that same moment, it measures the average true range and places a protective stop below the entry, at a distance of 2 times that average true range. The take profit target is set further away, at 1.8 times the stop distance, so the intended reward is larger than the risk being taken. Now watch the move develop. Over the next couple of candles, price accelerates higher, printing rising highs, and the gold accumulative swing index line rises with it, staying comfortably above its moving average. The buyers remain in control. By the 7th candle, price reaches the take profit target, and the long position closes for a gain in this illustration. Notice how the indicator confirmed genuine displacement, not just a single noisy spike, before the position was ever opened. After the peak, the character of the market changes. Price stalls and begins to roll over, and the gold line turns down from its high, curling back toward the blue moving average. The strategy is now watching for the mirror image setup on the downside. It doesn't guess the top. It waits for the indicator to prove weakness. By the 12th candle, price breaks down through the recent lows in a decisive bearish bar. In the panel below, the accumulative swing index drops to a fresh low of its recent range and falls below its moving average. Both short conditions are met, and the sell entry marker appears. The expert advisor opens a short position at the bid price. This time the protective stop is placed above the entry, again at 2 times the average true range, and the take profit target sits below, at 1.8 times that stop distance. From there, the decline continues. Each of the next candles prints lower, and the gold line extends deeper below its moving average, showing sustained downward commitment. On the final candles, price reaches the short take profit target, and the position closes in this example. Across both trades, notice the same repeating logic. The strategy waited for the accumulative swing index to break its own range and align with its moving average, entered in that direction, and defined its risk and reward with the average true range before the outcome was ever known. And of course, not every signal behaves this cleanly. In real markets, breakouts can fail, and the opposite breakout exit and the protective stop exist precisely because losses are a normal and expected part of trading. That brings us to the end of our deep dive into the Accumulative Swing Index Breakout Expert Advisor. Today we unpacked how Wilder's Swing Index measures the genuine strength behind each bar, how summing it into the Accumulative Swing Index creates a smoother picture of the market, and how the strategy turns a breakout of that line, confirmed by its own moving average, into structured long and short signals with average true range-based risk control. Remember, everything in this video is educational information only. It is not financial advice, not a recommendation, and not a solicitation to trade. If you found this analysis helpful, please like the video, leave a comment with the strategy you'd like us to cover next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.